112 weeks ago, I started with zero. No massive lump sum, just a plan to invest $60 every paycheck into 12 dividend-paying stocks to see if anyone can invest their way to financial freedom. And today, we're going to check on those results. Welcome back to the channel, or welcome to the channel if it's your first time here. My name is Troy, and I built this series because I was tired of scrolling around on YouTube and finding portfolios with thousands or even tens or hundreds of thousands of dollars in them, which felt impossible to reach. To me, it honestly felt like nobody had a video going back to day one to show us the ground floor, showing you the real money, the real struggles, and the real compounding of the discipline. If you happen to be just starting your own journey today and want to see how this portfolio began, I'll link episode 1 above. We started there with literally $0. And really quick, before we dive into the video, I want this to be the best series for you guys. Please tell me in the comments down below if there's anything I'm missing in this series that would make it so much better, or anything you think I should scrap. Let me know down below. But now, let's see the momentum. Here's where we stood last episode. Taking a look at the pulse, as of our last check-in, the portfolio sat at $3,845.93 with a total gain of $422.43, or 12.37%. This past Friday, the $60 army was deployed once again. That's $5 into each of our 12 compounders. Whether the market was up, down, or sideways, we stayed the course. As you can see here, we have two stocks slightly out of balance because I completely forgot this Friday was for the ACI portfolio and did not check to make sure we were in balance. Nonetheless, the goal for this episode is $290 per holding, and we're pretty close. Now, since every stock in this portfolio starts on the same playing field, the market is the ultimate judge. This momentum chart tracks the percent gained or lost just since our last episode. Once again, it always seems to surprise me how much some of these stocks move over just a 2-week period. If my memory serves right, this week started off really good, but I know the last few days have been rough, and this chart shows it. This right here is the perfect example detailing the ebbs and flows of the stock market. Some of these stocks have gone from my best performers to my worst performers, and vice versa, and only time will tell where they actually will end up. Putting this chart in motion has been a lot of fun for me personally, as I think it's so much better at showing the ups and downs of these positions over time than the typical line chart. Please just do me a favor and remember that the market in the short term seems to have a mind of its own, but over the long term, when you take a second to zoom out, it normally ends up going up and to the right, which is important to remember in times like these. After all that volatility, here are the current standings. AVGO continues to give back money, but remains our MVP, up just over 67%, while HUM has once again taken the crown for the biggest dog, down just over 36%. We're in familiar waters with this one though, because not too long ago, this one was in the same position, and we bought the dip and lowered the cost basis by a lot and plan to use the same plan here as well. Zooming out to look at this portfolio as a whole, you'll be able to see the ups and downs since this portfolio began. When people talk about the stock market being risky, this is what they see. The day-to-day, week-to-week, month-to-month swings. Those alone are typically enough to scare and intimidate the average person away from doing the right thing and staying invested, which only compounds the problem, aka the buying high and selling low issue. With us being in this for the long haul, it'll be laughable to try to find these rough patches on the bigger charts years from now, so there won't be any hopping off the ride halfway through here. While the holdings in this portfolio do seem to blow with the wind these days, there's one thing that remains consistent: the dividends. Since last episode, we received one dividend and one interest payment in this account. Here you can see the interest payment from SPAXX, which is just free money we're being paid to wait for the next bonus investment, so you can't be mad at that. For this next payment, take a look at what this payment started at and where it's at now. You're going to see some exciting growth in there. On March 2nd, Carlisle Companies, or stock ticker CSL, paid out 82 cents, bringing its total to $3.59 all time. And like I said, you can see each payout jump from the previous payment, and that's due to more money being added and a few dividend raises sprinkled in there as well. When you start a brand new dividend portfolio, trying to find excitement in the pennies or nickels it's throwing your way can be a challenge. The way of thinking that has helped me the most is to focus on the percentage differences over time, and that keeps me motivated in these harder times as a dividend investor. For example, you can see that we ended February at $3.13, which is hardly anything to even speak about, let alone be excited about. But when you compare it to February January of 2025, just 1 year ago, you can see that it's 89.7% higher, and that gets me a little happier for sure. So far for March, we're only at 82 cents, which if the month ended 1 weekend, would be 39.3% lower than last March. But the good news is, we still have 3 more weeks and more dividends to come, so we don't have to worry about that, which would otherwise be a letdown for sure. Later in the video, I'll share with you what dividends are remaining for the month and see if we can beat that March of 2025 number of $1.35, which I don't think we'll have an issue doing, by the way. Now it's time for the bonus investment minigame. As a reminder, since the stocks in this portfolio pay out vastly different amounts, we don't drip the dividends. We pull them until we hit $60 so we can buy a free round of all 12 stocks at once. The very first bonus investment in this portfolio was completed on January 9th, 2026, which was 724 days after the portfolio began. And based on the current numbers and most recent investment, the second bonus investment is now projected for June 14th of 2027, or just 521 days after the first one. In just 2 months, we've knocked off 203 days from the first bonus investment to the projection of the second one, and it's going to keep coming down before we actually get there. So that is yet another small win for this small portfolio. It'll be so cool to see where this portfolio is at in a few years when we're doing bonus investments quarterly or even sooner. It isn't a matter of if that'll happen, but how quick we can make it happen. As promised, let's take a peek to see what else is coming this month between now and next episode. The next episode should be coming out on March 23rd, so it looks like we have 2 payments headed our way between now and then. On March 12th, KNSL will be sending a little cash our way, followed by additional pocket change from ODFL on the 18th. Also, it's important to outline the ex-dividend date on the 17th, which is with PHM, which locks in the next payout from that one, likely to come our way sometime in April. While the market over the last few weeks has been acting like a 3-year-old not getting its way, we're going to continue to add funds and buy these dips and receive dividends in the meantime. If you want to keep up with the amazing passive income growth we're seeing in this portfolio and the sprint to the second bonus investment, hit that subscribe button. 112 weeks ago, I started this portfolio with nothing. Today, I have a portfolio that pays me while I sleep. If I can do this with just $60 a paycheck, you can do it too. So what are you waiting for? If you're ready to start your own journey and want to know what it was like as I went through the very same process on my own, I'll link the playlist on the screen as it goes back to day one. Once again, I'm Troy with Dividend Obsession, and until next time, see you.